All right, let's get to the news. Because it's the calm before the storm. Tonight, Nvidia's earnings is seriously going to impact the stock market, and that, of course, will spill over into crypto. Speaking of crypto, let's see how BTC is doing right now. BTC currently trading at 91,952. As I've said yesterday, any pumps towards these areas, if they get rejected, then it's really not good news, right? I mean, I even said yesterday that the pumps are just to correct 50% of the previous impulsive move, okay? So draw your attention here. Yesterday, we live stream around these times. It was pumping, right? And I said 50% correction of this impulsive move. Now, we've pumped. We've sustained very well, New York. But then slowly grinded down back up. A bit of hope here, but no, we're grinding back down again. Okay, finding some balance here, still at the 50% region of this impulsive move. But we lost that again, and we're grinding now back down. And just this morning, Asia session, this is our current range, right? We're looking for what price is going to do if it reacts to the 50% correction of this swing low to this swing high on the 1 minute time frame. Now, how many hours ago is this? 3 hours ago, it just didn't care. It didn't want to find balance. It continued going down. Now we're climbing back up here again. So very, very uncertain. But all in all, if you're going to be trading, trade like me. You don't need to go through the headaches of high time frame and loading up your position, especially if you have a small account. It's better to just scalp 10-minute moves, 20-minute moves, 30-minute moves. But it's still very important to pay attention with what's going on around the world, okay? Because this is your money, guys. This is not just about the big boys. This is the economy worldwide, okay? So what are we expecting in prelude to tonight's Nvidia's earnings report? First and foremost, last night, dude, even more negative headlines. Peter Thiel's hedge fund dumped Nvidia shares just before its big earnings report. Last week, you have the news of SoftBank also offloading their Nvidia shares, right? They're very close with Nvidia, but then suddenly they wanted to dump all of their shares just before the earnings report tonight, right? Kind of sus. And I think this all comes down to the quiet story that's been unraveling in Japan, okay? In Japan. No one's paying attention to it, but in Japan. Bank of America sees strong medium-term gains. External risk remain. Warren Buffett, all right, quietly building his Japanese stock positions. We're going to dive into that in this video. Okay, but first and foremost, after last night, Nvidia closed at 181.3. Very scary because yesterday when we were covering live, it was around these regions at 184, 186. But 181 close, still pretty scary. But if you zoom out in a high time frame, still pretty bullish, right? Still pretty bullish. But I think tonight would be the actual storm that will happen. Whether that be going up, okay? If Nvidia both sales and earnings beat market expectations, especially Q1 performance, where they have reported it's a 76%. In both, I think around 70% in both sales and earnings, but Q2 came out a bit soft on the earnings side, but still strong on the sales side. Bit of divergence there. Now we don't want to see both numbers dropping. We don't even want to see, the same numbers as Q2, where sales are strong but earnings are weak. We want tonight both earnings and sales very, very strong. Okay, and let's see what are the situations dealing with right now, because obviously everyone around the world is uncertain. I think they're scared. It's very risk off mode right now in the market. The bonds are rallying, stocks are tanking, crypto is tanking, right? Big moves are in yen, which we'll talk about. Yo, what's up, Crypto Limbo? Thank you. Pause, no homo. I see Twitter has higher delay than YouTube. Yeah, I noticed too. Twitter is like, I think 5 or 10 seconds. YouTube is like 2 or 3 seconds. Oh, Mohammed is node. Damn. Yeah, the Alpha Drop OG. Alpha Drop OG. Okay. So yeah, not really a lot of inspiring headlines coming from the stock market side, especially with the news of Microsoft and Amazon downgrading their rating. Because principally, if you look at the Nasdaq in the context of price, we are overvalued. Right? We are overvalued. It's an overvaluation in principle, just in the context of price. And you reinforce this with what analysts are thinking around the world. You look at the City Revision Index. In case you haven't known, if you don't know what this chart is, this is a very useful chart because analysts around the world, they're basically, it speaks about, are they optimistic about the outlook for corporate earnings and vice versa. If the index is above the zero axis, then they're optimistic about corporate earnings. It means, yes, we're not really in a bubble. Their earnings are very, very, very strong, which justifies their stock prices being high. But right now we're seeing, all of these big stocks are in all-time high territory. But recently in Q2, their earnings numbers are not as strong as their Q1, suggesting that they're not earning as much now. The demand is kind of slowing down, even though it's still the number one product on the market. But still, investors, they only care about earnings. They only care about earnings and how that would justify stock prices. And based on the City Revision Index, we're declining. Not just in the US. Okay, US currently right now, as of November 14th data, US is at 0.16. You can see this blue line right here. It's been declining ever so slightly, but the big ones that have been declining are the one in the UK. Look at UK. UK right now below zero. It's at negative 0.14. Okay, Japan is at the highest. It's at 0.35, holding pretty strong. Therefore, I'm talking about the narrative. Okay, I'm talking about the narrative of the story no one is talking about on CT. Japan, what's going on in Japan? You need to pay attention to Japan, because I swear to God, if BTC, starts dumping towards 70K and everyone's on CT is asking you why is this happening? You hear it from here. It's because of Japan, which let's talk about it now. Okay? Here. Japan's government bond yield surged to highest in years, signaling regime change. Boys, if the media is already talking about their personal opinion, okay, this is an opinion piece, they're already giving you the sign. Okay? Because the chronological order goes like this. The news media would just publish, press releases. These past few weeks, we've been seeing press releases from Bank of Japan governors are being very hawkish. They want to raise interest rates, right? But now, it's not just press releases anymore. They're giving out their opinion pieces. And if you're not caught onto this, you must pay attention. What's going on? The rise in Japanese bond yields increase fiscal strain for Japan, tightens funding conditions for banks and insurers, and signals that global investors may reassess the yen carry trade. More broadly, the move reflects shifting global yield dynamics that could ripple into US treasuries and other major bond markets. Boys, if bond markets come up in the headlines, come up in the title, you have to take it seriously. Because if you don't understand bond market, you don't understand money. I'm sure you've seen that YouTube video where they explain to you what a bond market is, okay? If there's going to be a drastic change with the bonds, then it's going to be very scary, especially so for risk-on assets. Speaking of bonds, let's see how the US bonds are doing. Japanese bonds first, the 10-year yield. Look, this is way too high already. It's at 1.772%. This is just on the daily time frame. Where was the last high? Man, we'd have to look at the weekly to see where the last high was. Okay, with the interest rates that Japan is at right now at 0.5%, they cannot sustain this high amount of yield to pay back to bond investors. They're gonna have to increase it, make yen more expensive. And the last time that they raised their interest rate was in January 2025. I think that's also another quiet story of why crypto started tanking in February. I think it's more than just the Trump tariff story. Okay, let me pull out this one. It's more than just the Trump tariff stories, right? Remember here, January 20-ish, we started declining here. I think the Japan, them raising another 25 basis points in interest rates also influenced the crypto market. Okay? The most dramatic one, and the one that everyone remembers, is the one that happened in August 2024. Because it's been a very long time for Japan. I mean, it's been really long. Suddenly, they raised interest rates, right? A lot of carry traders will have to unwind their positions. They're going to have to leverage their risks in crypto, selling BTC to maintain their margin. A version of this, I think, is happening now. It's kind of being priced in, assuming maybe these Japan carry traders are already unwinding their positions. Hence, we're seeing BTC's sudden decline. But if they have not been beginning to unwind their positions, if they're not beginning to deleverage their BTC positions, that's what I'm trying to say, is if they're still hopeful that in December, Japan will not raise their interest rates, they'll buy them time. So assuming that they're still in their BTC positions, then we're waiting for this move. Are you with me? It's just speculation at this point. I'm just throwing it out there, okay? But if we're assuming that, okay, maybe these Japanese traders are de-risking in BTC, then these past 4 weekly candles that have closed bearish, these past 3 weekly candles that have closed bearish, I think they also have a part to play in that. Okay? Very scary times, ladies and gentlemen. Okay? The Japanese yen, this is the daily time frame. I've just been bleeding out nonstop. Okay? It's been taking a nosedive to the downside. This is the Japanese yen futures. What does this mean? Okay? It means they've got themselves a bit of problem with inflation and wage growth is going up. Okay? And investors do not believe, because they don't believe that they've stopped, because the Japanese government, they've stopped buying Japanese bonds. Okay? This is no good. The yields, let me see. No good. Okay? This is no good. The story, the narrative being presented here, keyword regime shift. Okay? This is gonna change how money is going to be seen in the future, especially for the Japanese yen. This is a massive problem that is unfolding in front of us. Okay? Here's another problem for you. Look at USD JPY. I swear to God, this was just 152 last week. Was it? Yeah. Right? Now it's climbing. It's climbing high. It's at 155.5 USD JPY. What does this mean? It means this forces the Japanese investors, the Japanese traders to start buying dollars and then offload those dollars into the yen to increase the value of the yen, because how much is yen right now? Really, really, really low. Wait, where is it? Okay. To increase the value of yen against the US dollar, because it hurts Japan in terms of trade. So if you've got inflation coming into play and you've got the talks of wage growth going up, you don't really want to disrupt the economy. And any way that you do disrupt your economy is if you allow the dollar to keep on succeeding against the yen. That means it's forcing them to use more yen just to make purchases. They can't do that. So they need to buy. What the Japanese need to do is they're going to need to buy a lot of US dollars and then bring the dollar down. But the problem is, macroeconomically speaking, if you bring the dollar down, then logic says that everything should be going up. Okay, because Bitcoin is against the US dollar. What is Bitcoin doing now? It's not. Okay? That's the issue we got, because the problem now boils down to the interest rates. Money is still expensive now. That's why you need to pay attention to news. If all the interest rates of all central banks around the world are at 0.25%. When was the last time that happened? 2021, right? Interest rates were at 0.25%. You don't really need to care much about fundamentals. You can purely rely on 100% technical analysis, because money is cheap. technical analysis on the high time frame is much more respected because money is cheap. Okay, but now money is expensive, and if you're doing technical analysis and you're wondering why you keep getting stopped out, is because market conditions change every single minute, especially so for Bitcoin. That is so true. Okay, let me break it down for you. These past 2 months, my win rate not very high because conditions change very often. The underlying problem that I have at the back of my head is, if the environment we're currently in, hypothetically speaking, is at like 0 or 0.25% interest rates for the US, right? Money is cheap. By then, I would have so much confidence. If we do have a pullback, that 50% correction would be respected. But the problem now is money is expensive. Money is being moved everywhere. Let me see this. So it makes you doubt that, are those levels that you chart up, will they be respected? Even on the order flow, right? So if money is expensive, then even if the US dollar goes down, where's DXY right now? DXY currently at 99.57. The purchasing power of the US dollar is not above 100. Right? No one's gonna be borrowing on a currency that is really low in value. Right? It doesn't make any sense, because that means you're gonna have to take on more of that currency just so you can improve your purchasing power to go and buy yourself assets. But if the value of your dollar is really weak and you don't even have purchasing power, where's your dollar purchasing power? We're not up, right? Ron did his fundamentals homework. So I don't want to dive down the rabbit hole, but all in all, the simple takeaway is this. You plop up the chart of BTC. And I think this is a lot of problem retail traders have, especially on CT, is don't get attached to the past. You have to adapt to what the market is doing. Don't be so stubborn as to we're going to see all-time high before the end of this year, because that was the most talked about narrative earlier this year, right? Is that, oh, we're gonna hit 150K before the end of this year. But after October 10th, that was the first sign already that the climb to 150K would be very difficult. And now it's even more difficult after we lost the 100K level. We're down here. When I say long-term bullish, if you want me to be honest, I'm still bullish. I just don't know when. Okay? So if there's going to be a big dump in the next 3 months, I think this will play out all the way until January. Because interest rate decision. Because if Japan won't raise their rates on December 19th, which the forecast says that they will, then the next interest rate decision would be on January 23rd, 2026. And if they don't get an interest rate hike here, they'll certainly get one here. Okay? Why? Because it comes down to this chart. You just need to understand this chart. The yields, the 10-year yield for the Japanese government bonds is climbing, and it's consistently climbing. It's at 1.774%. This is not sustainable, especially when you have the yen being so cheap. Okay. Yo, Dugaduk. Hello, hello. Where did it go? Okay. Yeah, basically the game for cheap money is kind of done now. Because global investors, when they borrow money, it tends to be from Japan because it's so cheap. But now, if it raises, and then you have the prospects of the Feds holding off on cutting rates, then in principle, it's going to be expensive to borrow money in general. Their options will be limited. I'm talking about investors. Their options would be limited when it comes to borrowing money. If everywhere around the world is starting to become more expensive to borrow money, right? Until we get a 2% goal for interest rates in the US and in the UK, it's still expensive money, okay? We're at 4% now. It's halfway to go. And how long will it take? Right? The forecast shows the talks of 3% would be in April. 4 months. Do you have 4 months to wait out your position? Leverage trading BTC. You're going to be eaten alive in funding fees, guys. Even if you're going to add more margin to keep yourself from getting liquidated, your funding fees are going to eat you up. So it's all about time, and it's all about borrowing cost. That's the most key takeaway that you must understand, and I hope you get smarter from this. I know you're already smart, but if you are not aware of this situation right now, you hear it from me. Okay? In other news, Tom Lee. He actually has a very interesting reason why right now crypto is weak. Why BTC and ETH in general are weak, why they're dumping. He says here that he attributes the current weakness in crypto prices to a sharp drop in liquidity, possibly caused by a wounded market maker pulling back operations following the October 10th crash. When a market maker has a hole on their balance sheet, they're seeking to raise capital and are reducing their liquidity functions in the market, likening this situation to a kind of quantitative tightening for crypto assets in 2022, which lasted for 6 to 8 weeks. There is substance to this because remember, a few weeks ago, Wintermute had a very controversial talk in the podcast where they say their liquidated position on October 10th was very strange and happened at a completely ridiculous price. Right? Even though we don't have access to their balance sheet, we can't see what's going on. What happened on October 10th was very wild. Okay, it's not just you and me, the retail, that got liquidated. You have market makers. All right, their delta neutral position also got liquidated and happened at a completely ridiculous price, which boils down to cost. They lost money. All right, but they did clarify that they're not going to be suing Binance. Everyone on CT then was talking about Wintermute versus Binance, how this is going to be the next Black Swan event, but apparently Wintermute said they're not going to be suing Binance and never had plans to. Okay. But the takeaway here is they obviously lost money, and which means they have to slow down their operations, if not cease operations to provide liquidity, which is why these dumps are very violent, especially more violent. Right? Last week, we saw a $40 million spot sell at 98K. This candle right here. There were a bunch of whales that spot sold 40 million, 30 million. I showed this to Michael, and Michael said, but that's 40 million, 30 million, that's not a lot. The market cap of Bitcoin is like in the trillions. It's not a lot. But that's the thing. There's no bids on the order book. That's usually the market maker's job. Okay? So the fact that even a 10 million spot sell can drive price very violently shows the condition we're in right now, and the order book is very, very thin. And I think it's just going to take time for it to recover. Tom Lee says 6 to 8 weeks maybe. So it's already been, I think, more than... I think it's already been 6 weeks, yeah, since October 10th. 6 weeks already. J2 says BTC is already losing 50-week MA for its second week. Wasn't that your invalidation run? Yeah, let's get to that. Let's talk about that. Here we go. Okay. So here, yeah, 100K. I did say 2 weekly closes below 100K is effectively a bear market. Then you also look at the infamous 50-week moving average. Man, we are so far away now from the 50-week moving average at 102K. I think this is like maybe the first sign of a bear market, but you have to remember this might not be the bear market of the 4-year cycle. If you believe in the 4-year cycle, you still believe that it's still in play, then yeah, it's gonna be a prolonged bleed for BTC throughout the next 2 years or the next year and a half. But I think this is when we say bear market, I think it's a very different context now. This is Wall Street season, boys. ETF controllings have about 1 million worth of Bitcoin. I mean, more than 1 million Bitcoin holdings across these Wall Street big boys. Then you have digital asset treasuries holding Bitcoin. Whole Bitcoin. Wait. Bitcoin. Companies list. You have the top 100 companies, public Bitcoin treasury companies, holding cumulatively 4.06 million Bitcoin. They have, in a way, controlling share already of the Bitcoin supply. We have 19 million Bitcoin in circulation. And rough math, what's the percentage? It's 26% controlling share. And much of the trading activity is from these guys, from ETF. And without the market makers coming to provide liquidity to absorb those sells, yeah, we're going through a tough time right now. But I think TLDR, the context is very subjective, right? It's like, it's tough times, but I think this is necessary. Okay, but I think we're truly over maybe if we weekly close below here. If we weekly close below 78K, then we are absolutely GG. There's no comeback. Then yeah, maybe the 4-year cycle is really in play, but I don't know. Are we in the 5 stages of grief right now where we're denying? Is this the stage of denying? Oh yeah, YouTube chat. Oh shit, Anita Cho is here. Yo. Chris Sank is here too. Long time no see. Yo. Oh shit. Sell once I reach 1 mil. Once I start making new kinds of farm, people don't need money at all. I remember you talking about the farms. Yeah, we were talking about that farms. Like an actual farm. Solo run. Yeah, Martin's very busy. M2 supply is still growing, so I'm still bullish. But, there's like a big disconnect now. Where's my X? Here. Where's the link? Where is it? Yeah, here. M2 my ass. Yeah, so we're in a risk-off environment right now. Anything else to cover? Oh, yes. Here we go. Now, I wouldn't say altcoins are completely dead. I think Some are worth playing right now, but it has to be like a short or midterm capitalization. And if you're going about it long term, it should be in the form of holding for returns or staking for returns. What do I mean by that? Let me introduce you to this headline. First and foremost, Kraken raised $800 million backed by Citadel Securities Investment. That puts their valuation at $20 billion. So centralized exchanges right now are still getting funded, and it's not a small amount. That's nearly $1 billion. And it makes me think that, they're getting fundings, which means they have ideas. They're pushing it to these, big funds. These are the big funds, Citadel Securities. They have ideas. They have utilities. So if it's not through shares, then it's got to be through tokens. Now, I don't know if Kraken will launch a token or not. But it got me thinking, this right here. Is there an altcoin for holders or stakers that pay out stable coins in rewards? Because at the end of the day, boys, altcoins have no utility. There, I said it. Altcoins have no utility. You only buy altcoins because it's a casino, right? But why do people buy stocks? Why do people buy Nvidia stocks? Why do people buy tech stocks? Because they get earnings, right? You hold those shares, earnings per shares, right? Then you get some dividends every quarter. Crypto, we don't really have that. We do for staking, but we get paid in the same token. That's why it's so inflationary. Okay? But what if we stake those? We hold those, but we get paid out in stablecoin rewards. That's even sexier, right? Which I think, by the way, Drop Protocol, even though they have ceased operation and they're not doing the airdrop, or not ceased operation, they've given up on launching a token and doing the airdrop. They did say that they're planning on doing some form of rev share with stablecoins. Let's see here. Yeah. Drop is exploring the possibility of distributing protocol revenue to Droplet's program participants as a way to return value to those who contributed to the protocol. I'm thinking it's more for Atom, maybe, the protocol revenue. But if it's USDC, it's chef's kiss. Atom is like, okay, yeah, fine, I'll take it, whatever. But yeah. Let's see. The Ask Surf AI said there are altcoins that pay out stables for holders or stakers, and most of them are actually exchange tokens. I didn't even know about this. I don't know if this is true. So here, KuCoin, 2 to 5% APY. The mechanism is 50% trading fees as daily dividends split to, I think, KuCoin holders or maybe stakers. OKX, also same, 30% trading fees as quarterly dividends instead of daily, but 1 to 4% APY stablecoin USDT payout to OKB token holders. Then you have Bitfinex, fee rebates up to 25% on stablecoin trades. And look, the common thing is their token is in the billions of market cap. I think any big exchanges will have those mechanisms to give revenue share with stablecoins. I don't know, because I don't have access to these centralized exchanges. We're in Hong Kong. We're very limited to access these. But if you are using KuCoin, you are using OKX or Bitfinex, and you're maybe staking these tokens or holding these tokens, let me know if you're actually getting paid out in USDT. I'm very, very curious. Oh, it's shares. What? Is it shares or tokens? What? Okay. And in DeFi protocol, you have Sky Protocol, Curve Finance, Aerodrome, Balancer, SushiSwap. Iconic names. They're giving USDC, USDS as well. All fee shares. So these are also interesting opportunities that you can do for now. Okay. So the takeaway is this, is if you're going to be buying altcoins, you must consider your risk appetite. Are you buying it so that you can sell at 10x, or are you buying it to hold for some form of revenue share? This is very enlightening for me, and I really want to share it with you guys. Because in the past, My basis of buying altcoins is for airdrops. How did that turn out for us? No, not good. Tia below $1. Oh my god, brother, what is this? Oh my god. The basis for buying altcoins for me before was just buy the token, stake the token, then get airdrops of other altcoins. But I think now, boys, at least for me, this is my personal thesis, not financial advice, is if there's going to be an accumulation season for alts, I'll be approaching it the same way as I would approach stocks. If I'm going to be buying it, there must be some form of revenue share, preferably stable coins. Okay? I think staking for the sake of getting airdrops, I think is a thing of the past. It's too inflationary. It's not sustainable. Price will keep going down. I'm very scared that's actually going to happen to Giza. Look at Giza. We've completely lost 10 cents. We are trading at the list, like at the lows of the dump after TGE. Now, we haven't crossed this threshold yet, but it's already very scary territory. You can see the probability of it to reclaim 17 cents is just too difficult. I think it's very difficult to get back up there. Because, well, what are you buying the Giza for? Their white paper says it's for governance. Okay. Right? But there's no proposal yet. There's no snapshots from Giza. Yeah. Check on the chat on YouTube. Bro talks like we're in a funeral. Because we are in a funeral. Oh my god. It's so sad. I want to laugh, but I'm laughing and smiling in pain. You have this. Where is it? Where is it? Yeah, you have this headline just creeping behind every investor. It's scary, but be prepared for it. All right, let's answer some questions. I'm going long on XAU around 40.80 with the SL around 40.72. 40.80.72. Oh yeah. As of now. Can do, but the recent structure has shifted bearish, so maybe it's looking to fill. I think it already did actually. It filled 50% here. Yeah. So continuation up. Yeah, it's playable. Decent. See. BT, yeah. Are we gonna be trading live today? Let's see. Maybe. Let's see. Do we have a setup? Because we already filled 50%. The move already happened here. Hmm. 4 hour? Still at the open. Indecisive. I think I'll wait for price to take out these highs of the hourly open and then look for a short. If we see weakness here. It's the same exact thing as yesterday. And a long here. We'll just stick with overextended moves rather than get chopped up in the middle. So, there. My trigger for shorts would be if it's weak here, if there's a structure shift here. like that. Then I'll place my stops here and target 50% back towards the mean. Same thing as well for longs, I guess, here. If it makes its way here, and then, yeah, break, retest, stops here, target here. Yes, Zersky. Yeah, it's in bonds. It's very risk off now. Bonds. The 10-year bond. Gap down, but it's stabilizing at these levels. The yields are also stabilizing, suggesting that, you know, this in correlation with NASDAQ, NASDAQ declining and S&P 500 also declining. You see, like, oh my god, we created new lows, dude. We created new lows. It's very scary. Dow Jones also. Means it's very risk off. Stark is pretty strong, probably short-term play. Is that Starknet? This? Oh yeah, look at that. There's a lot to catch up though. What's the narrative for Starknet? Privacy also? Kraken acquired a prop firm named Breakout Prop as well this year. Big. Paradox dropped NFTs to their top users, and those NFTs are worth hell of a lot. Did you qualify? You're at rank 800, right? Zeno is also playing with it. Yo, Marcel, what's up? Trader SZ called BTC move from 108k to 126k. Now he's waiting for his trigger to play the move to 144k. I really want him to be right, but just timing wise, it doesn't have a lot of time left if 4-year cycle is in play. Yeah, that's his thesis, and he has his fail-safe, right? It tells you where his invalidation point is as well, not just his triggers. And I feel like Trader SZ doesn't really pay much attention to fundamentals as well, because the fundamentals that we're in right now, condition changes every day. One day you're bullish, one day you're bearish. It's not even just one day, it's one session. Every session. Yup. We're in the trenches. Oh, and also another meta to consider is perp dexes too. Look, if centralized exchanges are raising funds, perp dexes will need to also have an answer for that. So recently they're doing buybacks. So and Aster completed $214 million in total buybacks. Super bullish because right now Aster is at 132. This is not like the other altcoins that are at previous lows. Aster looks like it's trying to reclaim its former ranges here. Interesting too. Look at that, 138. That was our macro low before the October 10th liquidation event. Look at that. It's come back, but now it's kind of rejecting. But let's see if we can continue to push. If Aster continues to trend and at least range inside the previous macro ranges, right? It shows that there's follow through even though Aster has completed their total buybacks, right? This is CZ's project, guys. He's gonna fucking pump it to $4. So if you haven't, if you're interested in trading on a perp dex, trade on Aster. Super good. The airdrops are surprisingly good because season 3 was so underfarmed. Martin got 5 million points just trading BTC and Aster. 5 million points. And the share is much larger than season 2 because season 2 was so diluted. Everyone was trading during season 2. But after season 2 airdrop, Even though it was diluted, the allo was doubled depending on how active you were in Aster, right? Then you see a drop off in season 3 because it doesn't make any sense. How is Martin's share higher than my share in season 2 when I had even much higher points, right? So season 4 is currently live for Aster, and it's the same methods. It's perpetual volumes. They coin it harvest era, so you can do easy delta neutral strategy there to ramp up on the volume. All right. And did you do continuous airdrop content? If it's worth looking into, yeah, I would share. But I'll do my very best to also cover airdrop content, but it would be towards the end of the stream. I think, now it's just much more important to pay attention to news, to the macro, because these big buys are gonna they're de-risking. I told you, right? There's a whole different war going on with the subclasses of the rich people. Look, BlackRock, pretty good inflows recently, but the net is still outflow. These rich people are different from Michael Saylor. Michael Saylor is 1 BTC equals 1 BTC. Price shouldn't matter. But for these guys, these are the older generation. They only care about the dollar value of their portfolio. If they see a drawdown in their spot ETF, they're not gonna hesitate to tell BlackRock, sell this so I can rotate my money elsewhere to give me better returns. And now the talk of the town is the interest rate decisions from Japan next month. Okay, talk of the town this week is Nvidia earnings tonight. Let's see how the market goes. It's kind of scary, actually. It's also kind of sus because why are we pumping right now why are we slowly grinding up? Is it to grind up and then, when the news come, boom. I don't want to see that happening, but if it's gonna happen, better happen fast. How many days we got left to? We got 4 days left for the week to close. And if we close this week bearish, it's signaling weak confidence for investors. And when I mean investors, I'm talking about the same people that are dumping through BlackRock. Okay, the clients of BlackRock. Where did it go? Too many charts. Yeah. If this week, in the next 4 days, we close bullish, still a bit sticky. You need to reclaim 100K. Then find balance here. Because now we're still in a form of market imbalance. It's searching for the previous area where it found balance, which was here. But this is also scary because it's close towards where our invalidation is. Oh my god, note this 20R away for a 4K payout. Big! You are winning hard, dude. These strats are working. Check out wall chain. Okay. Let's see wall chain. Is it this one? Wall chain quacks. Okay. Alright, I'll check them out a bit. High win rate weeks now. How many trades do you do per day? 1 or 2? Really good, huh? No, pretty strong. Okay, so take care, guys. Tonight, big news. Nvidia earnings. Don't have any positions opened, but if you do, please do some form of risk management because it's going to be volatile. I guarantee you. Whether that be going up or going down, it's going to be very, very volatile. Everyone is eyeing on this news. Take good care of yourselves. Sub to me. Like this video. And we'll check you guys out later. My name is Ron.